Okay, so welcome. We finished on our last meeting time, I believe. We're talking about FUTA and SUTA, and we were talking about reciprocal agreements. Can anybody, without reading the slide, remind me what that is?
Get your crowd, you give me something, I give you something else.
That defines the word reciprocal and tit for tat, right there in the ministers.
I didn't look at the slide.
Okay, yeah, that was not on the slide.
Yeah, that was wrong. The reciprocal agreement wasn't that where you're paying extra for a lower percentage.
That's actually something else. That exists, that's just not this. So you know something about SUDA, it just doesn't tie in with this. So reciprocal agreement, paint a picture, I'm an employer that has to, what? What's my issue? Go ahead. I have employees in multiple states, and it's really often crafted around somebody that has like fluid employees. So I'm logging in Idaho and Montana, I'm drilling in North Dakota and Montana, I'm fishing between Alabama and Louisiana, whatever. It's not always natural resource extraction, but I'm just using that because it's easy. So the issue is, where do I pay my SUTA to? And we went through that list, right? Where's the work located? Where's the operations managed, et cetera? And then we talked about how if you can't get a proper answer, or you just want to consolidate your SUTA and you're operating within states that are amenable to that, you would go to their Department of Labor and Industry and say, hey, can we craft a reciprocal agreement? And that's going to be beneficial to you. It might not lower your costs. It just makes it easier because then you don't have all those sets of reports to do every quarter, and you don't have to track people based on what state they work in. So that would be easier. Okay, so we're just going to talk about this all day? Uh-oh. Don't freeze up. All right. Let's go here. So we know that FUTA caps at $7,000 per person per year. We know that the second bullet's kind of maybe not self-evident. If you guys work for me, say I open my business on December 1st, and you guys all work for me, and it's the end of the year, and I owe you 2 weeks' wages, but I'm not going to pay you till the 2nd of January. Do those wages count towards FUTA cap this year, or in the year that I pay you? Always the year of the cash. And that's a confusing thing because sometimes, hear me out here, your wage expense, your gross wage number for all your reports don't equal your general ledger. Why would that be alarming to you? And what might that be attributable to? Or would that not alarm you?
Well, you want to know how much money you got and because of taxes?
So it's not how much money I've got, it's trying to tie out my gross wages.
Yeah.
So I'd like to be able to look at my books and see a number, I'm just going to use an even number, 100,000, and then go to my 941s and my W-3 and see, 100,000. But that's probably not how it's going to work if you're an accrual basis taxpayer. Because of what I just said, I owe you guys 2 weeks worth of wages. I'm going to go into my financials, I'm going to accrue 2 weeks of wages. I'm not going to pay you till the next year, so it doesn't go on any of my payroll reports. But it does go through my general ledger. Does that make sense? And then the SUTA wage bases are different in each state. It's kind of confusing because some states actually are $7,000, but that's just a coinkydink, right? What's the base in Montana? All the way back to week 1, what's on your little piece of paper? How much?
No, it's 0.6. 1 to 6.2.
The rates go between 1 and 6, but what's the wage base? In other words, what is a cap at? 32 grand. And that goes up every year, a couple $100. Wages are everything. We've been through these lists enough times. It's not just your cash. It's your retroactive wage, your tips, your stock comp. Now, that's a typo. If employee has more than one employer, if an employee has more than one employer in a year, so say I have actually 3 jobs, each employer is going to pay a food and suit on me. Okay, they don't have any way to talk to each other. So it's applied separately, isn't it? I think we had a problem for today where it was an employee that stayed with a company but transferred states. How does that work? One more time. He's going to pay SUTA in both states, but what happens to FUTA? That FUTA, the wages kind of carry from one state to the next because that's a federal tax. Okay, so $7,000 if I work for Providence Health and then I get transferred to Washington, that $7,000 cap goes with me, but they have to pay SUTA to both Montana and to Washington. So you start the clock again for SUTA, but not FUTA.
Do you get any of that back when you do state taxes at the end of the year, or is it
No.
just?
All these kinds of things are specifically exempt for FUTA. Again, there's nothing new here. Retirement pay, if you pay tuition, meals and lodging, if it's for the employer's benefit. Okay, this is the most complicated part of this chapter. So, we have been taught or have learned this number down here, right? 0.6%. That's actually net FUTA. Really, the way the full calculation goes, although you're never going to see anything pretty much other than this, is that the gross FUTA rate is 6.0, but then you get a 5.4% credit. 6.0 minus 5.4 equals 0.6. What the heck? Why are we going through all that? Can't imagine, right? Well, I'll tell you. And I've been doing this for, God, more years than I want to admit, probably 35 years. And the Great Recession of 2008 was the first time I've ever seen this happen. So everybody's got a gross rate of 6.0 minus a SUTA credit of 5.4 equals net FUTA of 0.6. But that SUTA credit can change in 2 situations. One, you're late on your SUTA payments. So that's just employer-based. Number 2, and more interestingly, is if you're in a state that's in Title 10 or Title 12 default. Is that right? Title 12. Title 12. Okay. I just want to make sure I've got the right terminology here. So, the 2 reasons that 5.4% credit would decrease. A, I'm just an employer that's late on my SUTA payments. Okay? And then my SUTA credit's going to go down. If that 5.4 goes down mathematically, what happens to the 0.6? It's going to go up. That happens when you're not paying your SUTA on time. To get the full 5.4% credit, you have to have made your SUTA payments on time. If not, the credit is limited to 90% of the tax. So that credit's going to go down and my net FUTA is going to go up. But the other thing that can happen, and this affects all the employers in a state, is I'm in a state that's in Title 12 default. Title 12 is when you're in a state that runs out of unemployment money and has to go to the feds. And that happened in 2008 and 9 and 10. Michigan, Nevada,
Arizona, Florida, California. I mean, there was like 16 or 17 states that just flat out ran out of money to pay their laid off people unemployment benefits, right? So what do they have to do? Everybody hates the government till you don't hate the government. They go to the feds and say, we need to borrow money because I can't cut Jen her check. I'm out of unemployment money. The feds borrow the state's money. It's called Title 12 funds. And they give them 2 years to start paying them back. If the state can't start to pay the feds back that money that they borrowed, then every year that SUTA credit goes down by 0.3%. So everybody in that state, their FUTA goes from 0.6 to 0.9. Next year still in default, 0.9 to 1.2. Next year still in default, 1.2 to 1.5. The state, or the feds are trying to partially recoup part of the money the state's defaulted on. But now it's not coming from the state, it's coming from the employers. Josh?
So how does the state run out of unemployment?
So an unemployment fund is just like any other insurance pool. People pay into it, and in times of a robust economy, there's lots of employment. Lots of employers are paying in, not that many people are claiming.
Okay.
The balance goes up. In a recessionary period, there's fewer employers paying into the fund and tons of people claiming. It's just like Social Security. I showed you how the whole triangle went upside down. We used to have 4.3 workers for every retired person, and now we've got like 1.2. And that's going to actually be upside down probably here in about 15 years. Mathematically, it's not sustainable. Amanda?
So technically, the food tax is 11.4 in actuality.
No, it's 6.0 minus 5.4 equals 0.6. It's a credit.
Okay, so the full 6% and then it's okay.
Yeah. Ben?
What happens once the state catches up? Is there a period of time, like, does it immediately drop back down to 0.6?
Yes.
Full credit?
Great. So the question was, say that like Michigan was in default for like 4 years.
40?
4.
Oh, I was like, whoa.
4 years. Their economy is actually just jump started, like within the last 3 years. So, where was I going with that? Oh, so the question was if they've gone from 0.6 to 0.9 to 1.2 to 1.5 to 1.8, and then all of a sudden they finally get even, they get the feds all paid back, it drops immediately back to 0.6.
Does that happen in the middle of the year then? Or does that happen in the year?
I don't know the answer to that. Like I said, I mean, I've been in practice 30 odd years. We never had anything happen to our economy. I mean, when Bush left office and Obama came into office, in that 90 days of transition, our economy took a heavier hit than it has since the Great Depression in 1929. I mean, you guys all know that. The banks were failing, massive toxic mortgages. You know, I mean, that's what Obama walked into. And within 38 months, we had an economy that was adding jobs. But when he first came into office, I mean, you turned on the news every month, we were losing 400,000 and 500,000 jobs a month in this country. It was shocking what he walked into. So this happened, there was like 16 or 17 states in that situation. It was bad. I think there's still 2 states that have credit reduction.
Do you know which ones those are?
Well, that's a really good question, and I'll tell you how we can find that out very easily. I don't know that Cali's one of them. Let's see.
So if every year it goes up, what if they are still in default and they hit the 6% and then it just stops going up and they just?
Gosh, yeah, I guess so. So the way we can find that out, okay, we need to find something called a Schedule A, which is what, that should be down here. let's see, 940. 940 schedule A. So this is that Schedule A I was telling you about if you're a multi-state employer. Oh, they don't have it pre-printed. Interesting. Well, I was just going to go look. Usually they've got the reduction right here. Huh. This isn't pre-printed for some reason on the irs.gov site. One more thing, let's see. 2019 credit reduction states. Let's just see for giggles. Is California, which states are credit reduction states? Okay, right, I see that. Yeah, I don't know. Credit reduction state. Final 28 credit reductions. Let's look at that. Okay, all that was left in 2017 was Cali and the Virgin Islands. In 2018, it looks like California must have paid back. But you can see in here, when the unemployment crisis really manifested, because like I said, we were losing 500,000 jobs a month, 2008, 2009, and even into 11. And then you can see that's where all these states started going into credit reduction. I mean, dang, it was practically everybody. Montana did not, I don't think. I know they didn't. Nope, we're not in here. Montana did not. We maintained a budget surplus through the height of the economic recession. One of 3 states. We have a constitutional amendment that we have to have a balanced budget. We also have a constitutional amendment that everybody has a right to clean air and clean water. And that alone makes our state constitution very unique. Yay, Montana. That didn't have a deficit. I can't tell you that. But I know it was like nobody. It was like a really fiscally conservative. I think it was like North Dakota. It was like North Dakota, Montana, and then something Midwesty, but not Eastern Midwest, because that's, you know, like Illinois, Indiana, Ohio, Pennsylvania. They were in pretty deep crisis. Nebraska, maybe. Okay. So this first bullet here is what I'm talking about risk pools for any kind of insurance. So like if you pay car insurance, and this really pisses people off, you know, you pay car insurance for 10 years and you never even have a fender bender. And then you get in a minor accident and your rates go up. And people seem to think that there's some account with their name on it for this money that you've been paying in all this time accrues, and you haven't even, that's not how it works. They're called pooled funds. Everybody pays in, and based on your risk as a pool, we all pay costs, right? That's why, you know, so say you've got 20 people in a room and 18 of them smoke cigarettes, and the 2 that don't still are paying health insurance premiums. They shouldn't be happy about people that are diabetic or cigarette smokers, because those premiums are going to accrue to them, isn't it? That's pooled fund. There are some things you can do to mitigate your costs, like with car insurance. If you've got, you know, X amount of years of no claims, you might get a reduction. But pooled fund is oftentimes not favorable to those that are the lowest risk. Okay, so second bullet, each employer pays a rate based upon their history. And if I have a history of very little turnover and very few claims, over time, I'm going to get a lower rating. But if I'm like a company that just churns employees in and out, so everybody's always claiming unemployment, I'm a high-risk employer, I'm going to get higher rates. That's called your experience rating. And believe me, if you have a lot of employees, this can be a significant cost, right? Think about 5%, up to 32 grand for each employee. That's 1,800 bucks a year, and now I've got 20 employees. It's a big cost. Okay, and then the last bullet is that every employer will pay an initial rate based on their industry, and that's what'll stay in effect until the first cycle, the first year passes, and then they can assess. So if you come in and you're starting a small chemical company, and I'm starting a telecommunications company, and you're starting a coffee shop, we're going to have very different initial rates, because by nature, anything in food and beverage is going to have a higher churn rate of employees, right? So I'm going to pop your rate up. Chemical company, I can't even comment on that. I don't know why I use that. For an example, I don't know anything about it. But anything tele-based, right, digitally based, has lower turnover. So I'm going to get a better rate. But what I'm just saying here is everybody gets an initial rate for the first year based on their industry, and then it shifts once there's some history. Okay, I think that one of your homeworks looked at pages 513 and 514, so we'll take a peek at that. It's all the different caps and rates for each state. Basically, I just said this. The terminology here you're responsible for on the bottom, a positive balance employer is one who's built a reserve up. In other words, they've paid in SUTA and not had very many people claim against them. So they've got a positive balance. Even though it's a pooled fund, they don't have their own account, but they've built up a reserve. If I'm a negative balance employer, I've paid in $5,000 and the fund has paid out $30 in unemployment comp. So I'm a negative balance. That means that the state's going to have to raise my rate in the future, aren't they?
So for unemployment payments, if you're claiming unemployment, you claim against a specific employer?
Yes, you claim against a specific employer.
So once, is there a cap, like, it's whatever they pay for you specifically?
Nope. No, so if you're a, say you're a mid-range paid employer, you make 14 bucks an hour. So you make 29 grand a year, or employee, you make 29 grand a year. I let you go, you claim unemployment, you come back against me. Up to 6 months, I'm going to pay you a percentage of what you earned before you were unemployed. I'm not, the unemployment fund's going to. And it doesn't matter how much I paid in for you personally, or even what I paid in totality.
Some of that I know mentioned that they were doing unemployment from their employer. Because they were let go.
So they claim it against the Department of Labor and Industry. Yep.
And so then they end up getting letters about their previous employers, and the previous employers are saying stuff about, well,
Right.
he left them, or they left them.
Right. Super good question. So for those of you listening online, the question is, if say that I got let go, I came to the university in September and they retrenched my program and let me go in May. And before that, I'd worked at University of Vermont. So now I go to claim unemployment against the University of Montana. But based on something called a look-back period, the University of Vermont, Montana's going to try and turn around and get some money from them to backfill my unemployment. But if the University of Vermont didn't let me go, they don't want to pay. I quit them to move here. That's not their problem, right? So that's the issue. Going back to prior employers and being like, so, okay, why did she leave your employment? Because they don't want to get claimed against if I just quit.
Is that something the Department of Labor does, or that they?
Yep. Yep, no, it's the Department of Labor.
So you said 6 months, is that a standard? Is that for Montana? Is that-
It was, and I can't, don't quote me on this, but certainly in my lifetime, one of the things that Obama passed within, I don't know, 15 months of being in office was an extension of unemployment benefits, first to 12 months and then to 18 months. And that was unprecedented.
I was on it for 99 weeks and it cut off.
99 weeks?
99 weeks.
You were?
No, a friend of mine, I was on it, I got 52.
99 weeks, holy crap, that's 8 years. Oh, weeks, months, I'm like, holy shit. Okay, so almost 2 years, wow. Okay, my understanding was it went to 12 months and then 18 months.
That was in Idaho, so I don't know if it was.
No, that was a federal law, and the feds backfilled that because the states couldn't pay for that long.
So does that mean, like, say you get laid off from a seasonal job and you're unemployment, then you go back and work again?
Well, seasonal jobs are really, really tricky. That's like I'm a fire jumper, or not fire jumper, a smoke jumper. I was getting firefighter and smoke jumper put together. So if I'm a smoke jumper and I'm a long-term employee, I'm laid off when I get done with fires in September, October. Early fires probably starting in the spring with all the heavy snowfall out west probably aren't going to start until April this year. So I've always got like a 4-month period. If I'm a long-term employee, I'm going to get unemployment for those 4 months. But if I'm a temporary smoke jumper, not so much, because there's not enough history to go back and look on.
So you hear about people who, like, make their career out of living off of unemployment instead of working where they go.
There's so much urban lore around that. I'm not saying that some people haven't found a way to scam the system by any stretch. I'm sure there are methodologies to do that.
So if you were to work in a job, not necessarily a seasonal one, get laid off, and then.
You've got to have a history of 5 quarters with an employer to get paid out unemployment. 5 quarters. So if I get laid off now, what quarter am I in? First quarter. They're not going to look at my wages this quarter. They're not going to look at my wages last quarter. They're going to go 4 quarters before that. So that's a hell of a lot. I need to have been here for, 12, 15, 18 months to even claim full unemployment on it. So when people are like, yeah, I worked for a couple months and then claimed unemployment and I'm making a living off of that, there's a piece of the story missing there because that's not how it works.
It's like the same, what you mentioned was smoke jumpers, it's like the same thing with a lot of construction workers.
Sure, same for outdoor construction. There's no way I'm going to be putting up exterior walls in January. Or what?
Pouring concrete.
Anything exterior. Same. But like the guy that goes up and he's a lifty at the bowl for 3.5 months, they're not collecting unemployment the other 8.5. I've heard people say that. I'm like, you're full of crap. That's not how it works. You don't work for 3.5 months and then get unemployment for 8.5 months. You can't even claim off a snow bowl if you only work for them for 3.5 months.
For those employers who are seasonal work only, like, obviously the street that's not open during the summer, how does their paying into it work if the employees can't claim next summer?
Interesting. I don't know the answer to that. I think that's just a cost of overhead. Now, they do have full-time year-round employees. I mean, they've got groundskeepers, that's probably not the name of the term, facilities managers, whatever, a GM. So they're paying in, certainly, obviously more for those seasonal employees than for their long-terms.
So question, so I was let go from a job, I was fired, and I worked for 3 months, and I got unemployment.
Are you sure? You didn't claim it on them.
I don't know.
It would have been from a prior
They
employer.
fought me on it, because they fired me because being gay is not really protected in Montana, and I'm trying to get licensing for it, so I got paid for it.
That sounds to me like an employment attorney stepped in and said, yeah, I'm just telling you anecdotally, that sounds to me like an employment attorney stepped in and said, you don't want a sexual preference discrimination suit
Okay,
against you.
okay.
I obviously would need to know more about the details, but if you work for somebody for 3 months, you don't even have any claimable wages because it's not the quarter you're in, it's not the prior quarter, it's 4 quarters before that.
Are there rules on being fired?
Certainly, certainly, and we're going to learn a ton more about that when we look at the SUDA section. These are really good questions and examples. Okay, nonprofits, my husband's CFO of the youth homes, they choose not to pay into SUDA. Instead, they're responsible for paying unemployment benefits. So he does an analysis every year and says we have 180 employees. There's high satisfaction when you work at the youth homes. There's low turnover. We don't want to pay 3.2% of 180 employees' wages, right? So we will just take on the liability on ourselves to pay you out a state calculated amount if you can claim unemployment. But only nonprofits can do that. Does that make sense? Okay, the Dumping Prevention Act, charming name, stops businesses. So here's what happens. I've got a horrible history of churning through employees, churn. And so my unemployment rate's really high. And I'm like, oh my God, I've got a 6% unemployment rate, or not rate, charge. And I want to get that down to 2 or 3%. This is killing me, this overhead on my, so what I'm going to do is I'm going to shut down this business and open a like-kind business under a new federal employer ID number, transfer you guys all over there and get a new introductory rate like we learned about. You can't do that. You're artificially, it's basically like tax evasion, right? You're just playing with subsidiaries and parents and offshoring and all that crap. Can't do it. SUDA dumping prevention. Okay, so this is really straightforward. We know this, that you don't pay SUDA and FUTA on all the gross wages. You only pay it on the portion up to the cap per person per year, right? And there's a different cap for SUDA than there is for FUTA. Okay, 940, how many times a year do we file that? Once. It's an annual report due by January 31st. We know that. You need to attach a Schedule A. We just looked at that guy. If you are in multiple states or you're in a credit reduction state. I don't know why you'd need an extension of time to file your 940. If you've got your ducks in a row, you just get it done. If you're correcting it, you mark the amended box. If it's your final return, make sure to mark final, or every year the IRS will contact you and be like, where's your 940? It's like, I've been shut since 2013. Did you mark the box final?
So what's the extension for if it's not an extension to pay?
To file. And actually, just FYI, same thing with your income taxes. Every year I have 2 or 3 clients. I'm not really going to have the money by April 15th. I need an extension. Well, the extension is an extension to file your tax return. You've still got to put in a chunk of money calculated on what you think you're going to owe for your taxes. It's not an extension to pay.
So they can charge interest starting at that age?
Absolutely. And you do not want to borrow money from the IRS. Very high interest rates.
What is the interest rate out of curiosity?
It is prime, whatever the prime rate is, which is the US T-bond rate. It's right now like low, like 2.2%, plus 12%. Prime plus 12. We've done a 940, so I'm not going to walk through all the parts. How much when do you have to deposit your 940 taxes? Only when you get to 500.
So if you get that 500 within the first quarter, then you have to do it quarterly, or how does that work?
So if you get to the 500 the first quarter, deposit. Second quarter, I get to 300. Don't deposit. Fourth quarter, I had another 300. Now I'm at 600, I got a deposit. So whenever you cumulatively get to 500.
So, I wasn't here the other day, but I understand the $500 thing, but it just kind of goes into a pot until there's $500 and then you deposit it every time you hit.
Yeah,
So,
it's not really a pot, it's a calculation.
but it just, maybe it's like a separate account or something, it just sits there until you hit that.
Yeah,
And you
it's,
deposit it.
because it's not that big of a chunk of money, most employers wouldn't start a whole nother bank account to grab that. But whereas they would for FICA Fit. Remember how I told you, like, employers that only have to pay once a month, but they cut paychecks once a week? I'll tell them, take your FICA Fit and put it in a separate bank account. Because oftentimes then you'll get to make that monthly deposit and you're like, where am I going to come up with $1,800?
This is really.
And you've got to electronically deposit if it's $2,500 or more. Here's your due dates. What do those due dates look like? Same due dates as what? Yes, thank you. Same due date that you have to file your 941s. So filing your 941s and depositing your 940 tax fall on the same date. And this last bullet, you know that if you never get over $500 all year long, what do? Send it in with 940, right? You don't have to deposit. Still got to get what you owe to them. So you just send it in with a 940. There's a little voucher called a 940B. Okay.
Are these forms available for employees to file electronically? Or do they
Sure.
print them all out and then send
No.
So if they did it electronically, then they could just deposit their $500.
So filing a form electronically is different from depositing funds. Filing forms is, I can't remember the name of the system. You have to set up a PIN number with the IRS. Okay, you guys, you've got to set up a PIN system and file your form. To deposit, does anybody remember the name of the system you have to deposit through? It's got 5 letters. It's an acronym. That's not even in the ballpark of the same thing. And it's 6 letters, but that's okay. EFTPS, Electronic Federal Tax Payment System. Nobody was even close to that, were they? Oh, were you?
She got the first two.
Did you? Okay. Okay, somebody help Warren out. What's a simple? It's a what? Go ahead. It's a pension plan, simplified savings incentive matching plan for employees. It's for small businesses to have pensions. Okay, so many acronyms.
So you're saying that they both, even if it's under 500, they can do the electronic?
Sure, sure. Okay, SUDA reporting. I'm not going to spend much time on this because we're going to have a whole section on this for Montana. But basically in all states, you've got to do some sort of reporting on a quarterly basis. And this is where they go through the process of cross-checking the social security numbers of anyone that's claiming SUDA with all of the employer's reports and the university. So I get laid off, I start claiming unemployment, and then I go to work part-time in a bike repair shop. And like they'll never find out I'm only working 8 hours a week, $10 an hour. Well, at that quarter that I'm in, Open Road Bicycles is going to file a report. And it's going to have my social security number in it, and it's going to say I paid Lisa $1,362 last quarter. And that's going to get matched at the state level with the fact that I claim unemployment, and I'm going to be in trouble. Also, you can't be a full-time student and also on unemployment. Because how can you be looking for a full-time job if you're a full-time student? So if I'm a full-time student, once a quarter, the university has to do a data dump full of social security numbers, that goes to Montana. And they match it with everybody on unemployment. I think you can take under 12 credits. Actually, I think it's 6. I think you can take up to 6 credits and claim unemployment.
Why do they do that? Because you can still have a full-time job. Like, I have a full-time job.
Right, but by nature, right. I mean, that's sort of a 21st century manifestation. The theory is if I'm paying you unemployment, I'm the state, and I'm paying you unemployment, you should be available and looking for full-time work. And that what you're describing doesn't describe most people, the ability to do that. Okay, I'm not going to spend any more time on that. Okay, should we go through the homework?
Yes, it is.
Can somebody tell me, so I can just put on the board and refer to it, what my assignment was, our assignment was? Go ahead.
Good questions, 4, 5, 6, 7, 8,
Okay,
10, 11, and 13.
okay.
And then problems at A, 2, 7, 8, and 16.
Thank you. Okay. Pencil skirts are very tough to get on and off these chairs. Let's find, where am I? Solutions. Okay, first off, let me open the solutions so you guys can check them. And somebody was asking me about this the other day. If you struggle with any of the homework that we do or you didn't get it right, I would really go back and do problem set B and then check it. Because problem set B is exact replication of problem set A, just different numbers. So if I'm struggling with something, go do the like kind problem set B and check it. Okay, so we're on the questions. Page 532. Ben, you want to read me the first one? Tell me what you did.
First question.
Yeah, number 4.
Under the interstate reciprocal coverage arrangement, the services of a worker can be covered in the state of the election of the employer as long as the two factors exist of the conditions. The employer performs any work, the employee maintains the residence. The employee performs work, the employee maintains residence, the employer maintains the place of business.
Right, so the employee's got to be in that state, the employee's got to live in that state, or the employer has to have a place of business in that state. In other words, I can't be like, I want to pay unemployment to Missouri. I don't have anybody that works in Missouri. I'm not in Missouri. I just don't want to pay Montana rates. Greg, 5. You read it for me first. Bottom of page 532, I think.
To what extent does FUTA coverage extend to the services that citizen of the United States performs for an American employer outside the United States?
So I am an American state citizen. I'm working for an American employer, but I'm stationed in Croatia. I'm working in Croatia. Does my employer pay food on me? Does. Yeah, they do. Okay, because I'm working for an American employee. If I go to Croatia and I'm working for a Croatian employer, obviously they're not paying on me. But it's the same concept. It's just working on this. I'm helping write a textbook. And this morning I was looking pretty deeply at people that work around the world. So like one of my clients, she works in Senegal. She's trying to help get reproductive rights expanded for women in Senegal. And she works for a Senegalese employer. Interestingly enough, the money she makes there is taxed in the United States. Why? She's a U.S. citizen. And as a U.S. citizen, whatever you make anywhere in the world is taxed in America. If you want to give up that citizenship, fine. Then you're not paying American tax.
The answer up here said that it has to do with if families remitted
One more time.
So on the answer.
Right.
It says unless there's home services in Canada or any other jurisdiction.
Oh, that's just a loophole in legislation. Yeah, if they're in Canada or Mexico, this isn't a true statement.
So what would happen then?
You're just not paying for, you just don't have to pay FUTA. So if I employ you and you go work up in Manitoba, I don't have to pay unemployment on you. It's just one of those weird exceptions. I honestly don't know what the history is on that. I can't even speculate. Rhett, 6.
Number 6. So, which of the following types of payments are taxable under FUTA? A, commissions as compensation covered for employment.
Is that taxable under FUTA?
Yes.
Yep. How about Christmas gifts?
Yes.
No.
But no.
Because they're nominal value. What does that mean?
Less than sell
Yeah.
money.
It's not even a dollar amount. It's just small enough to be not worth tracking, is how the IRS defines it. How about courtesy discounts?
No.
No? Reimbursement of business expenses?
Nope.
Nope.
And then the last one, dismissal payments is yes.
Yep. So just A and E.
I did the same thing with this one.
One more time.
I was questioning the nominal thing. But
Yeah.
it said Christmas gifts excluding non-cash of nominal value.
Anything that's nominal means it's going to cost you way more to track it than anyone's going to extract from it. Right? We looked at like personal use of a company cell phone. Or, they give you a ham at Christmas. Okay, Josh? 9, 8, 7. Let's count backwards.
So what is an employer required to do in order to obtain the maximum credit of 5.4% against the FUTA tax? And they must file their state contributions on or before the due date, which is January 31st.
Okay, so not so much file. What is a state contribution? These words are used interchangeably. Let's just go through this. What is a state contribution? Make a guess. Yeah. Your SUTA deposit is synonymous with your SUTA contribution. That's a little puzzling to me because a contribution in my mind is something I choose to make. Okay, so SUTA contribution, SUTA payment, SUTA deposit, all synonymous terms. So that's one thing. The question, what do they have to do to get the maximum credit? Have to make their SUTA payments on time and also what? Not be located in a Title 12 state that's in default. It doesn't say that up there. So those are the two things. How do you get the whole credit? A, I make my SUTA payments on time. B, I'm not located in a state that's in Title 12 default. Because if I'm in a state that's in Title 12 default, it's a credit reduction state. My SUTA credit goes down, my FUTA rate goes up, right? Ms. Brooke, 8.
An employer who has a favorable experience rating is permitted to pay a state contribution at a reduced rate of 1.5%. What percentage of taxable wages must be paid in aggregate to the federal and state government? And I had trouble with this one. I kind of talked about it and thought it was the reserve ratio.
It's not. It's just a fancy way of saying add together the FUTA and the SUTA. Oh. Nothing too mind-bending there. It's just adding together the two. That's aggregate. When you aggregate something, you add them together. Okay.
Those out there, like 20 minutes.
Okay. I don't know what I think about Googling. I think that it allows us in some ways to get quick answers, but I think it in some way allows us to be lazy, not saying that, but in particular. And I also think, and this just never ceases to amaze me, that people will go online and Google something, hit the first link they see and be like, yeah, Jesus wrote this. Like it is the absolute gospel. And it's like, yeah, I don't know. I think it was some guy in his underwear that hates Putin or something. You know, it's like, I mean, you can go find whatever you want on the internet to agree with your personal bias. And I think we've lost the ability to vet sources and say, who wrote this? Who funded them that wrote this? What's their agenda? Where's their research? What's the data set?
True, but it's hard. Encyclopedias are out.
Talking about most of what I see.
Yeah, talking about IRA.com.
Oh, yeah. I mean, it's like, and I think it's really sad that not students, but just like us in general have lost the ability to do that. I'm a super Nazi about it. I only have one class where people have to write peer-reviewed papers. It's my sustainability class. And I'm really like throwing URLs on there without citing where the data's coming from is not working for me. I want to see the
We have
research.
Google Scholars for that.
Huh.
Well, you said with technical writing class,
Uh-huh.
we could use Google Scholars because that's peer reviewed.
Okay.
And only does peer reviewed
Right.
journals.
Just out of curiosity, how many of you know how to go to the library website and go to and pull down peer-reviewed research on your own? Okay, well, that's good to know. I mean, the day that nobody can raise their hand in a college classroom on that would be a very sad day. I'll be dead. Or maybe not. Okay, cheerful.
Yes.
Kim, 10.
What is the purpose of Title 12 advances? It's for states that experience financial difficulties and are unable to pay their unemployment compensation benefits. They can borrow funds from the
Yep. So all of those title, you hear like athletics are under Title 10 and Title 8, Title 12, Title 11. Those are pieces of federal funding legislation that channel money to states for various projects like education or unemployment or whatever, housing. Okay, 11. Amanda, what did you get for that? They were asking you to read the tables.
You want me to read?
Yeah, which state had the widest range of tax rates?
I said Arkansas.
Yeah, wow, that's crazy. 0.4 to 14.3. Scott, which one did you see had the highest weekly unemployment payments? Massachusetts, 742. And Warren, what did you see for the state with the highest wage cap? Washington. B and C are not puzzling to me because those are both liberal states. A is a little puzzling to me. Arkansas is very red. And the fact that it's got such a high cap to their unemployment rate is very unusual in a conservative state. You'd usually see that lower.
What do you think contributes to that?
I don't know. I can't even speculate. I really don't know anything about Arkansas economy. What do they do?
Nobody knows. Nobody knows. We all just know like the claims are from there. That's it.
That's really the beginning and the end. And the founder of Walmart.
Yeah.
Oh, yeah.
And Tyson Chickens.
Sam Wolf.
Tyson Chickens.
You're right. Okay, it was.
Tons of chicken.
What about cinnamon?
Lots. No, gross.
Oh, no, it was contaminated. I'm thinking of chicken nuggets and things like that.
Oh,
That had to be contaminated.
there's no chicken in chicken nuggets anyways.
All in the chicken.
Ugh, it just gives me the quivers. It's not food. It's just parading as food.
You're
Blah.
not living unless you eat it.
Of what?
Are we skipping the chicken nugget?
For real?
Yeah, I haven't done that. I'm
Oh.
fine. I went to the doctor, my heart's great. Yeah, exactly.
You're still young.
I'm old, I'm 26. You should.
Yeah, that doesn't really qualify as old, newsflash. Okay, 13.
They think that we were like 5 or 6.
It did. Who's subject to FUTA? Basically, is that what it says? Oh, for somebody who is subject to FUTA, number 13, what do they got to file? 940. When does it have to be filed? JAM 31. And we practice filing a 940. I want to get to another one before class is over, so keep going here. Okay, problem number 2, sorry. Basically, they give you some data and ask you to calculate FUTA and SUTA. And they've got a pretty healthy payroll, $737,000. But 472,120 of that is over $7,000 per person per year. And this state also has a SUTA cap of 7,000. If that was Montana, that 265,000 wouldn't be the same number for SUTA or FUTA, would it? No. Okay, everyone get those then?
I was just wondering how the calculation was done.
So they took 737, oh, it's right up there, up the very, very top. 737, 910 minus 472, 120 gives you the wages susceptible to FUTA and SUTA. Okay. And then number 7, so here we've got Herb Porter, worked for Freeman Steel. He worked in Nebraska and then in Michigan, same company. SUTA rates were 3.2 in Nebraska on the first 9, 3.8 in Michigan. On 9. And then they give us his wages for $20,900. 2,800 of those were in Michigan. Obviously, the balance of 18,100 was in Michigan. So does he have to pay SUTA to both? Does Freeman Steel have to pay SUTA to both Nebraska and Michigan? Yes. Only one set of FUTA, but SUTA to both. Oh, I stand corrected. They did pay FUTA to both states. Am I in the right one? Oh, okay. Here we go. Oh, okay. I stand corrected here. They didn't pay full SUTA in either state, did they? Okay, let me retract what I said. This must have changed in the last year. So he first worked in Nebraska. He paid the full, earned $2,800 there, paid 3.2%. Then they transfer him to Michigan, and the cap there is $9,000. But they back out what they've already paid him so far this year. Yeah, yeah. Well, you're not marking wrong or right. I'm just.
So when it comes time on our test, if we have a question like this, how do you want us to do it?
This way.
This way, or do they have?
This must be a shift that I didn't know happened. And then FUTA, one shot. That's the FUTA. The FUTA is the 7,000. And then in number 8, this guy worked for 2 different employers. He worked in Iowa, then he worked in Kansas. You've got to go look up the caps in your book. What was the cap for Iowa? 29, and he earned less than the cap, so it's all taxable. What was the cap in Kansas? How much? 14. And he made more than that, so they paid on the 14. So for this one, you would have had to have gone, what page are all those?
525. Oh, God, no, it's not. No, it's not. 515.
513 and 514, you'd have to go find the cap. In Iowa, she earned less than the cap, no problem. In Kansas, she earned more, so they only paid up to the cap.
514,
One more time.
514, that was it. 715 right there.
No, on 5-8, 14,000 is her cap.
Yeah. Yeah. But
And lastly, you had to do number 16. So let's just go through this. So you're the accountant for a moving company. This is harder than what I'll ask you to do on the exam. You're just going to do a straightforward 940 on the exam, like we practiced on Monday or Tuesday. So in this case, they give us the liability per quarter. Where does that go? What part of the 940 does that go? The 220, the 107, the 101, and the $56. That goes on the back side, right? But only if your liability's what? Over 500 bucks. Was theirs over 500? They didn't get to the 500 barely. So one of the employees works in Arizona, which means they have to fill out a schedule what? A, because where does everyone else work? Cali. They've got one guy in Arizona. So therefore they have to do a schedule A and allocate the wages. How much was the total gross wages for everybody? 120,800. Now, these guys had $3,500 of 401k contribution. And we know, we saw that here, that that's exempt from FUTA. And then they told us that there was 36,500 of wages in excess of $7,000. So 120,800 minus the 4,000, 40,000 is 80,800.
So you sound surprised when you looked on our website and said that the Schedule A wasn't filled out, is it normal?
Yeah, it's pre-printed right here. California, 0.021. That's the credit reduction impact. So by nature, that means there's 7 years without paying it back, right? 0.3 times 7 is 2.1%.
But the rest are still at zero.
One more time.
Because on this one even, the rest are still at zero. So you're saying.
Right, California is the only one that was left.
except for the back.
Oh yeah, Virgin Islands.
I have a question on the number that you have written here, 73,000. Isn't the number, that was to California 90,000?
So I've got to take the gross minus the $3,500 for the 401k minus the $25,010 that's above $7,000. The math's right here. 102,310 minus the retirement plan that happened in California. You don't pay food on that. Minus the number they gave me payments in excess of 7,000. That's 73,800. So they have to pay an additional $1,549.80 because they're in a credit reduction state. And that gets clicked on here. So what happens here? We pick up the first 3 months' numbers they give us, and then we add the credit reduction onto the fourth quarter. And your total has got to equal line 12. Okay, we've got 10 minutes left. I want to start on our last 940 for reinforcement, and we'll finish that up on Tuesday. So if you could go, please, I'm going to just come around and check off your homework. If you could go, please, to your Moodle shell. And pull up those payroll registers again. This time we're going to use Sure Value. No, what did we use last time?
The banner.
Okay. So we're on Sure Value.
And then please add, so you're going to take out your piece of paper, make that chart, first 4 quarters and then total. And I would see if you could test yourself with the chart from looking at our last example, because you're going to need to do this on the test. And you're going to remember how to do the chart. You want the first 4 quarters, and then can you remember what those 4 things were you had down to on the bottom? Gross wages, food wages, food liability, or food rate, excuse me,
And then
food liability, and food deposit. So set up your chart. Here's your 4 employees. The one thing that I didn't tell you that I had to was this, because they're bi-weekly. So 2 quarters of the year, they're going to have 7 paychecks. 2 quarters of the year, they're going to have 7 paychecks. So what I want you to do is start setting up your chart, and we'll do a check-in before we leave today that you're going to use a chart on company. And when you come back on Tuesday, we'll finish the 940. Or we'll do the 940 and start our exercise. I'm going to check your homework. Water.
some, you're talking about her. Anyway, you say you want to show that. Makes it very much more like it's something that makes individual sexual self.
How many times you paid a year if you're paid bi-weekly? 26. There's 4 quarters. Can you take 26 divided by 4? No. 2 quarters, you get 6 checks. 2 quarters, you get 7 checks. 6 plus 7 plus 6 plus 7. That makes sense? And I told you here that the second and fourth quarters are 7 paycheck quarters. So therefore, well,
Sometimes like we did last time. So multiply by like, there's 6 paychecks.
yes.
Okay, good, okay, then you were saying, oh, okay, sorry, that whole,
No, you're
sometimes
fine.
there's so much information I get confused.
But here's the thing, and I know students hate this, but when you go to work, no one's just going to give you the 2 pieces of data you need. You're going to be flooded with a ton of data, and task 1 is to extract what you need. Right?
Yeah, I want to do this.
No, I said the second and fourth quarter, you got 7 paychecks. It is, you're a great statement.
Well, this is a lot of weaknesses.
Just keep digging, my friend. I'm 57 and I'm still working on it.
So to answer, Josh, yes, we are doing exactly what we did
Okay,
last
good.
time.
Okay, good.
Ugh, irritating. Irritating.
The key here is you need to, off the top of your head, be able to pull down and say, what are the 5 things that I'm getting from this chart? Okay, remember that? Gross wages, food wages, food rate, food liability, and then how much do I have to deposit?
Reference to 940 kind of help us realize, oh, we need those numbers.
You will do the use of 940, you're like, oh my God, I don't have these numbers. And again, just to reiterate, you're never going to sit down at a desk in your job and do this. It's going to come from your payroll software. But I can guarantee you that you're going to have to review it for reasonableness and know that it's right. So what I'd like you to do for Monday is finish the chart, bring the chart in, and in the 940, and we'll go through it. So really your homework for Monday is to finish this chart and the Tuesday, and then translate it to the 940. So we're really on chapter 6, starting on Tuesday. I know. Oh, I want to come around and check it off. So just finish this, do the 940, we'll go through that on Monday and start on chapter 6. And I'm going to come around